The story of modern technology is deeply American. For decades, the U.S. led the world in innovation. Inventors and engineers built the digital age's foundations. Computer chips, tiny silicon wafers, became the brains of countless devices. American companies, especially in Silicon Valley, drove this revolution. Each year, chips grew smaller, faster, and more efficient. This relentless progress fueled a technological boom. The U.S. didn't just invent these technologies, it perfected their production. This created a strong lead in a vital global industry. The world looked to America for the latest advancements. Advanced devices from PCs to early smartphones relied on U.S. components. American software powered much of this hardware. This ecosystem of hardware and software created a cycle of innovation. American ingenuity shaped the future of technology. Universities, government funding, and private companies all played roles. The semiconductor industry, in particular, was a U.S. stronghold. Manufacturing techniques and intellectual property were closely guarded. This set the stage for complex global interactions. America's tech leadership was clear and widely acknowledged, but this dominance would soon face new challenges. The seeds of global competition were already being sown. The digital frontier was about to get crowded. As China opened its economy, the landscape shifted. Starting in the late 1970s, China sought rapid modernization. Technology was central to this ambition. American companies saw opportunity in China's vast market and workforce. Trade relationships deepened, opening channels for technology transfer. Joint ventures paired U.S. tech with Chinese labor. Investment flowed both ways. U.S. companies invested in China and Chinese firms in U.S. tech. Over decades, these exchanges became deeply embedded. American designs were often manufactured in China. The lines between where technology originated and where it was made blurred. The world's two largest economies were now deeply intertwined. The seeds of rivalry were quietly taking root. The next chapter would be far more contentious. U.S. technology transformed China's tech sector. Chinese companies learned quickly from American counterparts, starting by assembling products with imported parts. Gradually, they moved to manufacturing components themselves. Licensing agreements allowed legal adoption of U.S. designs. This helped Chinese firms climb the technology ladder. Many aimed to absorb foreign technology to build their own. China's now famous tech giants benefited from this era. Access to U.S. semiconductor designs was crucial. Over time, imitation evolved into adaptation and eventually, innovation. The global balance of tech power was shifting. A new rivalry was about to begin. In recent years, the U.S. grew concerned about China's rapid tech rise, especially its military uses. Washington responded with new export controls, aiming to restrict China's access to advanced U.S. technology. The first major controls in 2022 targeted semiconductors and chip-making equipment. Dozens of Chinese entities were blacklisted, blocking them from key technologies. The U.S. also worked with allies to adopt similar restrictions. The era of open tech sharing was ending. Strategic competition had begun. The U.S. was drawing new lines in the sand. The world watched as the two giants squared off. A new era had begun. China's response to U.S. restrictions was swift and forceful. Beijing saw the controls as an attempt to stifle its growth. The government declared technological self-sufficiency a national priority. President Xi Jinping called for breakthroughs in core technologies. The Made in China 2025 initiative gained new urgency and funding. Billions were poured into the domestic semiconductor industry. The National IC Industry Investment Fund, or Big Fund, was key. Its third phase alone provided over $47 billion. The goal: build a complete domestic chip ecosystem from design to fabrication. China aimed to control every step of the process. The semiconductor industry is complex and capital-intensive, but Beijing saw it as essential for national security. State-owned enterprises, private companies, universities, and research institutes were mobilized. China ramped up efforts to attract skilled engineers, including overseas Chinese talent. The push for tech sovereignty became a national crusade. It was a direct reaction to U.S. pressure. China was determined to write its own technological future. The message was clear. China would find its own way. The race for tech independence was on. The world was watching China's next move. U.S. sanctions hit Chinese tech giants hard. Huawei, once reliant on U.S. chips and software, was a prime target. Cut off from key components, Huawei accelerated its own development. The company launched a drive to remove U.S. tech from its products. By 2024, Huawei released new smartphones with more China-sourced components including advanced domestic semiconductors. The Kirin 9000C chip, reportedly produced by SMIC, was a major milestone. SMIC, also under US restrictions, made progress in manufacturing. Other Chinese firms stepped up. Changshin Memory Technologies invested in DRAM, and China's share of the global memory chip market grew. Alibaba unveiled its C930 CPU based on open RISC-V architecture, offering an alternative to US-controlled designs. The government heavily supported these efforts. Byron Technology, backed by Shanghai state-owned capital investment, aimed to develop GPUs for AI. The goal replace advanced chips from US firms like NVIDIA. While challenges remained, Chinese firms were innovating under pressure. The direction was clear: close the technology gap. State backing fueled rapid progress. China's tech sector was adapting fast. The push for self-reliance was gaining momentum. The world took notice of China's resilience. The tech race was far from over. The next breakthroughs could come from anywhere. Today's tensions contrast sharply with earlier decades. For years, the US and China shared a deeply interdependent tech relationship. This era took off after China joined the WTO and the US extended permanent normal trade relations. American tech companies saw China as a land of opportunity, low-cost manufacturing, and a vast market. US firms like Qualcomm, Intel, and Applied Materials earned significant revenue in China. They sold chips, software, and equipment, and set up R&D centers. Chinese companies became vital parts of global supply chains, assembling products for global markets. This created an intricate web of economic ties. Interdependence extended to components and specialized materials. The global tech ecosystem relied on this interconnectedness. National boundaries and supply chains blurred. A chip might be designed in the US, manufactured in Asia, and assembled in China. This system lowered costs and fueled innovation. But deep integration also created vulnerabilities. The US worried about losing its tech edge and security risks. China saw dependence on foreign tech as a strategic weakness. The very interdependence that once drove growth now fueled rivalry. The foundations of the relationship were being re-evaluated. The era of easy collaboration was ending. US efforts to restrict tech transfer created new challenges. For American companies, it meant losing access to a huge market. Lost sales could impact research and development. Some US firms lobbied against harsh restrictions, fearing long-term harm. Balancing national security and economic interests proved difficult. China faced its own hurdles. Building a self-sufficient semiconductor industry is hard, requiring capital, talent, and time. Access to advanced chip-making equipment remains limited by US allies. This bottleneck slows China's progress. Still, China is innovating with what it has, developing alternative paths. Despite US controls, technology continues to find ways into China. Reports detail schemes to circumvent export rules, shell companies smuggling, and a market for restricted chips. Enforcing controls is difficult. Chips are small, software is digital, and supply chains are complex. The economic ties between the US and China are deep. Officials on both sides acknowledge these challenges. A complete technological blockade is unlikely. China is investing heavily in its own research, producing good enough alternatives. The tech rivalry is now a test of resilience and adaptation. The outcome remains uncertain. Recent events mark a turning point. The US and China are moving towards separate tech ecosystems. China pursues indigenous innovation and self-reliance, but also global integration where possible. The goal: reduce dependency and achieve tech autonomy. The US is shifting focus too. Export controls are just one part of the strategy. There's a growing call to promote America's own tech industry. More public investment in semiconductor research and workforce development is underway. The CHIPS Act is one example of this new emphasis. The US aims to revitalize domestic manufacturing and innovation. This new era of tech competition will have global consequences. Other countries may be caught between these two giants, pressured to choose sides. Less collaboration could slow global innovation, or competition could spur breakthroughs. The world is watching this complex dynamic unfold. The stakes are about economic power, national security, and global influence. Both nations see tech leadership as vital. Their efforts to secure it will continue. The future may see multiple tech power centers, each with unique strengths. The interdependent relationship of the past is unlikely to return soon. A more competitive, fragmented tech world is emerging. The race for technological supremacy is just beginning.